Is the US economy collapsing sooner than we expected? A question that has been rattling around in many minds, creating a wave of uncertainty and fear. With the global economic landscape changing rapidly, it's becoming increasingly difficult to predict what's around the corner. To add to the complexity, we find ourselves in a web of interconnecting economic indicators, trends, and events that can feel overwhelming. This video aims to unravel the complex web of economic indicators and trends to provide an informed perspective on the subject. To understand the state of the US economy, we first need to glance at the global economic landscape. The world economy is a complex and interconnected web, where events in one part of the globe can have significant ripple effects elsewhere. Let's start with China, the world's second-largest economy. In recent times, we've seen significant debt problems plaguing China's second-largest property developer, Evergrande. This has led to a decline in Asian equities and has raised concerns about potential fallout in the global financial system. The situation is a stark reminder of the risks embedded in China's property sector and its broader economy. Moving on to Europe, the ongoing conflict in Ukraine has sent shockwaves through the Russian economy. Sanctions imposed by the EU and US have severely restricted Russia's access to global markets, causing a substantial drop in Russian stocks. The ruble has hit a record low, and Russia's central bank has been forced to raise interest rates to 20%. This situation serves as a potent example of how geopolitical tensions can have a profound impact on a nation's economy. Lastly, let's take a look at Lebanon, a country grappling with economic ruin due to the COVID-19 pandemic. The financial crisis there has caused staple food prices to soar, making life increasingly difficult for its citizens and refugees alike. The situation in Lebanon is a stark depiction of the devastating economic impact of the global health crisis. These global events have a direct or indirect impact on the US economy. They influence international trade, global supply chains, and financial markets, all of which are critical components of the US economic machinery. The domino effect of these global economic events can lead to shifts in the US economy, affecting everything from inflation rates to job growth. But how exactly do these global events impact the US economy? And what does this mean for the future? These global events have a direct or indirect impact on the US economy. Let's delve into how. The US economy, like any other, is influenced by global events but also has its unique factors at play. Let's take a closer look at the state of the US economy. Recent data suggests that the economy is on an upward trajectory. Manufacturing activity, for instance, has seen a significant boost, exceeding expectations. This surge in manufacturing has instilled confidence in investors, leading to an increase in US stocks. The Dow Jones, S&P 500, and Nasdaq have all shown gains, reflecting the positive economic outlook. But it's not just manufacturing that's doing well. Even in the face of soft industrial production figures, the market has remained resilient. This resilience is a testament to the strength of the US economy, which has managed to weather several storms over the years. This doesn't mean, however, that everything is perfect. Like any economy, the US has its share of challenges. The ongoing global tension and conflicts, for example, have repercussions that reverberate through the financial markets. The Russian stock ETF plunged by 23% due to increasing sanctions against Russia and the ongoing conflict in Ukraine. This has caused a ripple effect, affecting global markets, including the US. Moreover, the US economy is also grappling with the fallout from the pandemic, which has disrupted industries and led to job losses. Despite these challenges, the US economy has shown an impressive ability to adapt and recover. These figures, however, do not paint the complete picture. There are underlying factors we must consider. After all, an economy is not just about numbers and data. It's about people, their jobs, their livelihoods. It's about the businesses that drive innovation and growth. It's about the policies that shape the economic landscape. And that's what we'll delve into in the next segment, so stay tuned as we unravel the hidden indicators of the US economy. Beneath the surface-level economic indicators lie the hidden factors that truly shape the economy. Just as an iceberg's true size is concealed beneath the water, the full scope of an economy's health is often obscured by what we don't see. Let's dive a bit deeper to uncover these hidden indicators. Unemployment rates are one of the most direct measures of an economy's health. While official figures may paint a rosy picture, they often don't account for those who've given up the job hunt or those who are underemployed, working fewer hours than they'd like. The real unemployment rate, which includes these groups, can provide a more accurate, though less comforting, perspective. Inflation, that silent thief, is another hidden factor. It may seem harmless when prices rise by a few cents here or a dollar there, but over time, inflation erodes the value of money, leaving consumers with less purchasing power. This can hit hardest those on fixed incomes, such as retirees, who see their savings dwindle in real terms. Consumer confidence is a less tangible but equally crucial indicator. When people are optimistic about the economy, they spend more, boosting businesses and creating jobs. But when confidence wanes, the reverse happens. People tighten their belts, businesses suffer, and the economy can stagnate. Lastly, let's consider the state of the housing market. A boom in home sales can signal a robust economy with confident consumers. But when housing prices skyrocket beyond affordability, or when mortgage defaults increase, it can be a sign of an economic bubble that may soon burst, leading to a market crash. These hidden factors can signal economic troubles even when surface-level indicators seem positive. So, while the sun may seem to be shining on our economy, it's crucial to look beneath the surface to understand the storm that might be brewing. Given these factors, what does the future hold for the U.S. economy? The answer to this question lies in the realm of speculation and prediction, a space that is as exciting as it is uncertain. But let's navigate this terrain together, guided by the signs and signals that are currently shaping the economic landscape. We're seeing some interesting trends that are worth considering. On one hand, we have a robust manufacturing sector that's exceeding expectations and bolstering investor confidence. This is a positive sign, indicating that the engine of the American economy, its ability to create and innovate, is still running strongly. On the other hand, we have the specter of economic instability looming from overseas. The debt problems of China's second-largest property developer Evergrande have already dented Asian equities. And we can't ignore the ripple effects of the economic sanctions against Russia and the ongoing conflict in Ukraine, which have sent shockwaves through global markets. These global complexities could impact the U.S. economy in ways we can't fully predict. Will they cause a slowdown, or will they inspire new strategies and opportunities for growth? Then there's the wild card of unexpected events. Just as the COVID-19 pandemic blindsided the world and upended economies, the future may hold unforeseen challenges that could test the resilience of the U.S. economy. But let's not forget that the U.S. has a history of weathering economic storms. It's a nation built on resilience, innovation, and the relentless pursuit of progress. These qualities have seen it through many a crisis in the past, and they're likely to play a pivotal role in its economic future. So, where does all this leave us? Well, in a space of uncertainty but also of possibility. The future of the U.S. economy could swing in either direction, shaped by a confluence of factors, both domestic and global. Only time will tell the true state of the U.S. economy. But one thing is certain, it's a topic that warrants our attention and understanding. In the end, the question remains, is the U.S. economy collapsing sooner than we expected? We've journeyed through a myriad of factors, from the global economic overview that showed us the interconnectedness of world economies, to the current state of the U.S. economy with its highs and lows. We've examined the hidden indicators, those underlying currents that are not always apparent but hold significant sway over the economic trajectory. We've peered into the future, exploring potential scenarios and their potential impacts. What we found is that the issue is far from straightforward. It's a complex tapestry woven from numerous threads, each influencing the other in ways that can be difficult to predict. The U.S. economy, like any other, is subject to a multitude of influences, from domestic policies and market trends to international events and global economic shifts. All these elements come together to shape the economic landscape. It's a delicate balance that requires constant vigilance and a keen understanding of the subtle interplay of these various factors. The potential collapse of the U.S. economy is not a foregone conclusion but a possibility that we must remain aware of. It underscores the importance of staying informed, of delving beyond the headlines to understand the deeper currents shaping our world. So let's continue to ask the hard questions, to challenge the norms, and to strive for a more profound understanding of the world we inhabit. It's a challenging question with no easy answers, but it's our responsibility to stay informed, ask tough questions, and strive for a better understanding of the world we live in.
Subscribe for more videos like this. Turn on notification and leave a like to help the channel out. Thank you for watching.